Okay, welcome everybody. Today I'm pleased to introduce Professor Jay Feinman, whom I'm sure most of you already know. Professor Feinman is a distinguished professor at Rutgers Law School, where he teaches on insurance and is the co-director of the Rutgers Center for Risk and Responsibility. Today he's presenting a paper titled Improving the Market for Homeowners Insurance, the Homeowners Insurance Coverage Summary, and Are You Insure Score. Peter, and I were talking about this a little bit beforehand. It's fascinating. I look forward to the conversation. In 2 weeks, we'll be joined by Deborah Wittes of Indiana University Law School, and she'll be presenting a paper about privatized family leave insurance, which will also be very interesting. So with that, I'll hand the virtual mic over to Professor Feinman.
Okay, thank you. Thanks to Peter and Travis for inviting me, and UConn for so you can see the screen I am sharing with the title slide.
Yep, yes.
Okay, so yes, thanks to everybody. And thanks to all for coming. So the problem, I don't have to belabor with this group. The problem is most consumers don't know what's in their homeowners insurance. Most consumers do not make informed buying choices. The surveys show something like 60% maybe of people think their homeowners insurance protects them against flood. When you deal with less common, less dramatic issues, the numbers are even worse. And this became a problem a number of years ago when policies became non-standard. Carriers vary, therefore we have protection gaps, which surprise homeowners, disappoint their reasonable expectations when they have a claim. Happens, of course, because insurers have chosen not to compete on the basis of quality of coverage by and large, and the regulators don't care enough to do anything about it or much about it. So let me survey the current solutions first, and then I will describe what we have done, and then I will describe some of the problems with what we have done and where one might go forward. So current solutions first, at least one state, this is California, has a disclosure form with a few check off the boxes that must accompany homeowners insurance. So this is specificity. You know, do you have actual cash value, replacement, extended replacement cost? For a very few things as a matter of regulatory requirement. The rest of the California disclosure is general information like this, which is helpful, but not incredibly helpful, I think. And that kind of general information is broadly available. So the NAIC has something called Insure You, as in university, and it's you as in the homeowner. Provides really good information if people want to look at it. A number of state insurance departments link to this, or they have something comparable, but general. Would require the consumer to do more than most consumers can or are able to do in evaluating policies. So what a few states have done is taken the next step and say, okay, we're going to post policies, but more important, we're going to break them down for the consumer. So this is California. California has a policy comparison tool that you can see here, a number of categories, types of coverage, required minimum limits. And as you can see sort of at the top, I think substantially every insurer in California is listed. And you could pick the ones you want to compare. Here, Allstate and State Farm. And as you break down the categories, more detail. So this is coverage details, water damage. Notice the language here. What I think is a drawback is, to a considerable extent, when there is coverage, the language is copied from the policy. I understand the instinct, they want to get it right. On the other hand, it's less accessible to most people. But at least some things, that's good. Texas, which has this interesting entity called the Office of Public Insurance Counsel, which is independent of the Department of Insurance, same sort of thing, types of coverage, water damage, mold, other coverage. The problem again is they've selected some things and they've selected some things that are important, like water damage. They've selected other things that I find puzzling, like falling objects and animal damage. Maybe this is more of a problem in Texas and New Jersey, but I don't think it's primary when one's selecting homeowners insurance. And most recently, I find this very interesting. As you may know, there have been increasing restrictions on coverage for roofs, partly as a result of hail, partly as a result of windstorms, partly because they're very expensive. Missouri, which is quite a progressive state in this area, has a specific part of their website where you can compare the roof coverage provided by different insurers. It's the 10 or 20 largest insurers in the state, and again, you can match them, and I don't have the details. So this is what the regulators have done, mostly provide general information, and in a few cases, more specific. Of course, what most people do, if they're not just relying on their agent, is they go to the web. And there are what seems to be an infinite number of commercial sites who want to sell you something because they get a commission. I just picked one, NerdWallet, very large, very well known, not only for insurance, but for other sorts of things. And you can look up the best home insurance in any state for 2023, and they have evaluations of individual companies. Where NerdWallet's ratings are determined by our editorial team. Their editorial team says State Farm's homeowners includes more generous dwelling coverage in standard policies than many other insurers do, which is just completely false. They completely make this up, I think. And just an aside, the footnote on the editorial team says the scoring formula takes into account consumer complaint and customer satisfaction data, which is typically the way these things are rated, either that or large-scale surveys by J.D. Power, Consumer Reports, and stuff. Just as an aside, in terms of consumer information, there is information out there which is collected by the insurance companies and reported to the regulators. That is, for example, how many homeowners claims result in litigation, how many are settled in 30, 60, 90, 180 days, and so forth. I think that information ought to be publicly available as a measure of quality as well, but that's a different story. Okay, so there's what the regulators have done, which I think is not much, except in a few states. There are the commercial sites, which have the obvious drawback of they have something at stake. So we decided to take on a number of projects revolving around homeowners insurance. Protection gaps. Today we'll talk about the coverage summary and RU Insure score. We also previously did and will have just updated, will shortly announce a rating of the states as to how well they help insurers buy insurance, homeowners insurance, and so forth. A number of public facing sort of things. So the two we're going to talk about in Rutgers Scarlet, the homeowners insurance coverage summary and RU Insure score, the rating system. The two key steps here are to reorganize the information in a way which is accessible and meaningful to consumers, and then to prioritize what is important to consumers and what is less important. So this is a table of contents of a typical ISO policy. And if you're a consumer, some of it sort of makes sense. Okay, property coverages, dwelling, other structures, personal property. Some of it we know does not make sense because in there are going to be exclusions, exceptions to exclusions in different places, very hard to read, very hard to figure out. And if you want to know what they're going to pay you, you got to go all the way down to loss settlement. So not the best way to organize it. What we did, tested it a little bit. This is how we organize things. Okay, if you're buying a homeowner's insurance policy, what do you want to know? Well, there's the property insurance side, what's covered, what it's covered against, and how much am I going to get? Then there's the liability insurance side, which is sufficiently coherent that it can all go together. And then there's a few other things which arise, like what we would think of as statute of limitations, managed repair programs, and so forth. So that's in terms of reorganizing it. And in terms of prioritizing it, here are the principles. What matters? Frequency and severity of loss. So water losses are extremely important because they happen a lot and they tend to be very expensive. Falling objects and animals, much less so, less frequent, less expensive. Second, and this is a little bit intention, how much do the terms vary among policies? So the difference between replacement cost coverage and actual cash value is, of course, huge. But because of the requirements of lenders, practically every policy is a replacement cost policy. And therefore, you might want to place somewhat less weight on that distinction. What we do in the scoring is account for that in a significant but less obvious way. And then finally, generally, what do policyholders expect to be covered for? For example, we have a set of principles. Policyholders expect to be covered for common causes of significant losses. Policyholders expect to be covered for large financial losses, and so forth. But of course, these are just not expectations. These are reasonable expectations. Like, even though the homeowner doesn't know this, it's unreasonable to expect to be covered for a highly correlated loss like flood because of all the obvious reasons. So reorganized with different principles and 2 steps. First step is the homeowner's insurance coverage summary. What we have done is adopted, in a sense, the form of the summary of benefits and coverage required under the Affordable Care Act. This is precisely the way the ACA does this. Little introductory information, as it says, highlighted terms, which are then defined in a glossary, and separated into important questions and answers, which sometimes provide options, and some other stuff you need to know. Questions and answers in a relatively accessible way. What structures does the insurance cover? Well, the policy covers the dwelling and other structures. Gee, what's another structure? Because I have a shed, I have a garage, I have a fence. Does that's included? Well, if you care enough about that, you click on the hyperlink and it takes you to the glossary. Oh, and there are other things to know about this, like policy may not cover buildings used for business or some other types of structures. It's not sufficiently common to put in the disclosure here, but ask about it if it's important to you. Similarly, personal property, what's covered, common sense definition, most covered with exceptions, ask about issues that are important to you. Oh, but there are policy limits, and that's covered later, and so forth. So, like the ACA, SBC coverage explanation, somewhat more detailed explanations, including what risks do the structures policy cover? Well, it could be at an all risk or open perils or a named perils basis. Okay, I just want you to know there are different options here. And this is the form which is filled out for one policy. It's basically the HO3 policy as an example. But what we also have, if you look at the paper and the links there, we have a template, as the ACA does, saying you, the insurer, have to fill it out and you have to check off the appropriate box and so forth. And finally, extremely useful, what does the insurance pay? Well, the policy you have picked pays replacement cost. Yeah, what does that mean? You have the definition, but here's how it plays out. Oh, okay. If you have a kitchen fire and the loss is $15,000, if you have replacement cost as compared to actual cash value. Oh, but what about replacement cost versus extended versus guaranteed replacement cost? And how does that interact with your policy limits? And we were talking about this earlier, Travis aptly suggested, yeah, this is what really has bite. Like the ACA has examples, Maria is having a baby or somebody has type 2 diabetes. This is what the costs are going to be in a year. So maybe we want to highlight these a little bit more. So coverage summary, which would require regulatory action. We think insurance commissioners should require every company to do this. I have some pride of authorship, but if they want to come up with a better way of doing it, which is equally consumer accessible, that would be great. I have not had a lot of success persuading regulators or legislators to do much of anything, frankly. I don't see the arguments against this, right? Practically every state has a plain language statute which applies to insurance policies that nobody reads. Well, gee, why not digest the information in a way that they can read? So this seems easy, but that doesn't mean it's going to be done. So the coverage summary. Next step we started was RU Insure Score. Our public relations director insisted that we have a catchy name, which could be reduced to a hashtag. So RU for Rutgers University Insure Score, which is in fact the hashtag on X, formerly Twitter, and so forth. And what it does is does something very familiar. It does what Consumer Reports does for dishwashers. It does what a number of other companies do for other sorts of consumer products and services. It takes the insurance policy, the coverage, it rates it on a scale of 1 to 100. It also rates the policy on a 5-star scale. And for each individual company, as I'll show you in a second, it breaks it down a little bit. Now, I mentioned before, one of the principles is variation matters. One of the ways it matters here is because practically every policy is replacement cost policy. You know, there's no homeowners insurance policy that's a 30 out of 100. So the way the scoring worked out of the companies we were able to rate, Allstate scores least well, but a 73, not terrible. We describe it as, describe a number of these in different sorts of ways, but still really different than you can buy with Chubb, no surprise, way more money, or even Amica, which is a mass market company. And then, as I say, we also break down individual companies, their overall score, we break down according to the categories, things the insurance covers, risk the insurance covers, what the insurance pays, and things to watch out for. Oh, limited coverage for plumbing leaks, but good for mold risk and other sorts of things. And the idea, ideally, is the good consumer, but not the particularly informed consumer, is going to look at two of these and is shopping between, say, Nationwide and State Farm, and may ask a question. Oh, okay, well, why this different? What am I getting here? Great. So this seemed like a great idea until we tried to implement it. So it turns out that the first step, of course, is to acquire policies. As the paper says, we wrote to, I think the top 20 or 25 insurers in the country. One of them said, no, we will not send you the policy. One of them had some questions and didn't follow up. 18 didn't answer. Doesn't surprise me because of my prior work. I'm not incredibly popular with insurance companies. So what we did was we first went to the 6 states which publish all or some policies and collected all of them for the top 20 or so companies. We then went to SURF, which is published by the NAIC, supposedly providing all public documents. I won't go into the details. If anybody wants to do the search, I would be happy to talk to them. It's a mess. It's practically impossible to use, and there are gaps which are inexplicable. So that's why we ended up with 11 companies, because I was quite confident looking at the policies and talking to experts that most of the national insurers use the same basic policy in practically every state. But it's only for these 11 companies that we rated that I could actually obtain the policies. So it is what it is. I think that's one of the drawbacks because everybody's not here, but a lot of the big names are. Then the next step, of course, was to evaluate them. What we did was build on some work Dan Schwartz did, other people did, and we took the policy and broke it up into several hundred different elements. And then looked at a variety of information available to us, like the public information on severity and frequency of losses, like underwriting data, which is submitted by insurers to justify their rates, anecdotal evidence, quite frankly, and identified what we thought were the most important things that people ought to know. ended up with a matrix like this. This is the form I would give to my research assistants. So this is, okay, first Earth movement. I gave them the standard definition. Policies don't cover Earth movement. If there was a different definition, let me know. But this is mostly about mold and fungus, and we broke it up into whatever this is, 8 or 10 subcategories. Check off the box. If there are dollar limits, put that in. The comment points to the fact that policies are not organized to be user-friendly, in some cases simply for historical purposes. So we created search algorithms. How do you find this in the policy? Well, you could search, you have to search for mold, you have to search for FUNG, which may be fungus or fungi, and so forth. And then collected all of this, boiled down, came up with a scoring system, which produced this sort of thing. The details of exactly how we translate it into the numbers are, as the insurance companies like to say, proprietary and confidential. But the paper has more important, less important, important categories for a large number of these, which we think is sufficient disclosure. Okay, so summary of coverages, are you insured score? Conclusions. There's two conclusions that can be drawn from this. Conclusion A is that over time, this could be widely adopted and have a significant market impact, either this project or something like this. Conclusion B is that academics ought to stay in their lane and that this is an interesting project, but that's about it and has no effect. And let me just talk about where one might take this, or where we have taken this and where one might continue to take it. So our summary of coverages has not been published in a general way yet. I haven't tried to sell that. Are you insure score? We went public with sort of last March. This is a chart of website hits. So we did an initial publicity launch, and you could see we were some days getting 100, 200 unique visitors, some of whom would come back a couple of times. And then it sort of tailed off to some days none, some days 10, some days 20. Consumers or insurance scholars, I don't know, who would look at this. And then we said, okay, but let's be a little commercial about this. So towards the end of July and for the month of August, this over on the right hand is, we said, let's sell Google Ads and see what happens. And that accounts for the surge starting towards the end of July. So the surge we ran from late July to August 2023. Impressions is the number of times our ads were exposed to people who did Google searches. And we constructed it as one might expect: home insurance, homeowners insurance, best homeowners insurance, all that sort of thing. Went 147,000 times, and a little less than 2,000 people actually clicked on that. So, 1 out of 75 people who sees this. And that wasn't a lot of money. That was $344.57 in about, a little more than a month. State Farm spent $344.57 in the time it spent me to utter that sentence. And therefore, part of the problem here is market penetration. I want to talk about that. One other interesting thing which comes up from the information Google sends us is, okay, I think this is valuable stuff. 2,360 people during the relevant period, some triggered by Google and some elsewhere, clicked on the home page with the summary scoring. Of those people, 251, that is 10%, went to the detailed pages to find out more about a particular company. And out of the 2,300, 40 people went to the frequently asked questions, which actually told them what was going on here. So most people who do this just want to see the number. Okay, so that tells us about this going forward. Okay, so going forward, what are some of the things we've done so far and we'll continue to do? One is we've looked for partners. We're going to try to work with regulators. We had discussions with some of the well-known consumer agencies, nonprofits, which for one reason or another did not bear fruit. The other avenue is to try to sell this information, and I'm using sell in a generic sense. We're happy to give it away, wholesale rather than retail. That is, gee, would we like to send this to real estate brokers who, when somebody's buying a house, would say, oh, just thought you'd like to know, here's a way of comparing insurance companies or others like that. Because there are people who know how to do this better than I am, and it's a way of getting the information out there. So that's the story of where we started, what the methodology was, where we are now, and happy to do the discussion. And let me unshare. Share.
Great. Thank you so much. I read, we have students who are taking this series as a class, and I read some interesting student papers with reactions and questions. Do any of you guys, I'm not going to call on you. It's not the way we do things, but anybody want to ask a question? Especially if I sort of said, oh yeah, that's interesting. You might want to ask that question. You should feel, but even if I didn't. Nobody?
I'll ask a question.
Oh, who are you? I can't see you.
I'm Lenore.
Oh, hi, Lenore.
Okay.
Yeah.
Hi, and hello, Professor Feinman. Thank you. So I was intrigued by a bunch of things in the reading for this week that from your paper. But one of the things that really struck me was how rating systems influence consumer behavior, right? And I'm a typical consumer who sort of objects to buying the, last one on the list. And so I was a little disturbed because I actually am a Allstate Homeowners customer. So I pulled up my policy and I went through those 23 important questions to see how my policy stacked up and whether I needed to change companies. And, ultimately concluded that I did not see any red flags or reason that the policy wasn't well suited for my particular risk profile. And I was wondering if you think, if you've thought about how the scores influence consumer behavior and whether, there's some potential negative consequences of that.
I've thought about that, but haven't pursued it. I'm sure there are people, including probably some people on this call, who actually know that as a general matter. Here's the pitch I make to people. And whether people accept it or not, I don't know. It says, look, I don't care if you buy Allstate, which has a 74, or Amica, which has a 94, if those are the numbers. What I care about is you make an informed decision as to what you're getting and what you're willing to pay for it. Now, particularly in a market in which many people have concerns about availability at all, as we see in California, Florida, Texas, and everybody has concerns about affordability. I know lots of people who can't buy top tier insurance, but like the ACA, gold, silver, bronze, here's what you're getting, here's what you pay for. I see Hal Weston's comment. Yeah, my Google statistics suggest people only look at numbers. I would like to have people who know such things work on this project as well.
Thank you.
James, did you want to put that question as a non-chat question?
Is that available? Comment here directly.
Sure. I don't have video at the moment, but I'm a relatively proficient in insurance, a relatively well-informed insurance buyer, and I still use an agent. Do you have data on? So I would never go to this site until after my policy's probably been purchased on my behalf. What is the data available for how many people are actually buying their policies?
I should know that, but I don't know that. Somebody on this call know that?
I have no idea, but that does raise a more sort of theoretical question, which is when you have these kinds of, really complex transactions for which it's just ridiculous to think that a consumer would ever want to invest the time they'd need to really figure out what's going on. Isn't like an intermediary, the natural response is to say, well, yeah, but I have to have somebody that I can trust, if there is such a person, who will translate for me and sort of say, look, I know a little bit about you. I can ask you a few questions. Oh, I see that, yeah, you live near this lake, so maybe you'd really be worried about flood. And then they specialize in this and they can take care of this for you. I'm just wondering whether there's almost no amount of information that you could give a consumer that would be both relevant and sufficiently detailed to really help them all that much, or is that just wrong-headed?
No, I think that's substantially correct. I think there's some class of consumers who have a particular interest that this may trigger a question. But you're right, for most people, they want an intermediary. But there are different kinds of intermediaries, right? One is the agent. So for a long time, I had an agent in the small town who I trusted completely. Oh, by the way, I sort of knew the companies he was offering me anyway, and I could read the policies, so I could check up on him. Many people go to agents who, classic agency problem, may not have their client's best interests at heart, at least to the extent that, look, an independent agent represents 5 or 6 or 10 companies. They're going to sell you perhaps the best of those companies, even the best of those which does not give them the best commission. Let's give the agent a lot of credit. That doesn't mean that's the best insurance out there or the best insurance for this consumer. But for a lot of consumers, the intermediary is not the agent, it's the internet. And true story, exactly at the time I was starting this project, my dishwasher caught fire. No damage. We saw it smoking, shut it down, fine. I didn't know anything about dishwashers. I went to Consumer Reports and they did 2 things for me. One, they ranked them. And 2, they said, okay, this one is more energy efficient. Frankly, I didn't care that much. This one is quieter. I cared about that a lot and that sort of thing. So yeah, it would be great to have intermediaries who could be trusted. One of them is a reputable online source like this.
Great. Okay. Who else? I've got a million
And
questions. Oh,
I
here's
could.
Carol. Go ahead.
Um,
Please.
okay, some of these policies, there's significant state to state variation in what's allowed. And I think it's possible that some of the guidance in this summary represents deviations from state to state. Is there a way that this would be more helpful? Because it's not like the Affordable Care Act, where there's a very standardized set of benefits, to have that shopping tool work the same way. So
yeah,
is it possible that if you had a state version, then you would know, does this state allow you to exclude mold that is as a result of a covered loss, for example, or things like that, and kind of filter those variations out and then provide something that might be a little bit more helpful or streamlined in the way it gives advice?
yes, great point. And a couple of ways we've encountered with that. Early on, we started with the concept of, yeah, exactly that. As we all know, it's a state-regulated business, weirdly enough, and there is state-to-state variation, precisely as you say, and therefore we should do this on a state-by-state basis. Quickly realized, yeah, that's a problem. But then I said, okay, let's do this in California, which is, you know what, I don't know, 15% of the US population or something. That would be great, and has the advantage of all the policies are online. And then I thought, yeah, but I work for the State University of New Jersey, so that's a little bit odd. We could do this in a few states, but it would require massive work. And I just wasn't geared up for that. So first response is yes, I think people should pick that up in the states in which it is available. If you're in a SURF state, not one of the 6 publicly available, you're going to have limits.
And I can tell you, As
Go
a
ahead.
former regulator, I understand that as a regulator, that SURF is very cumbersome, but there are some really good online kind of training on-demand videos that kind of help people a little bit through it. I have yet to find that there was a policy I was looking for that I couldn't find. It's just that it's a lot of wading through to get there, but
Yes,
they are there.
well, let me pick up on that and let me come back to that. But if I forget, remind me. Back to the state by state variation. The second way we tried to take account of that was to say, okay, somewhere in the literature, the FAQ, which by the way, nobody reads, but we say exactly this. Yes, states may vary either because of regulatory requirement or because the situation is different. A lot of hailstorms in Texas, some hailstorms, not that many in New Jersey, and that may affect things. And therefore, what you see online may be somewhat misleading, but in the end, it's not going to make a difference in your shopping because the regulations apply to every company in the state. So, right, it may skew the numbers, but I don't think enough to take account of it other than in that sort of footnoted way. Now, to SURF, as you know, the NAIC is in year something of a modernization project of SURF, of which we have yet to see results. I've talked to the people there. All I can tell you is my experience. 2 points. One, I have not been able to find basic homeowners policies for national insurers in some states. And two, one reason for that, maybe some of them adopt ISO policies. But if they do, ISO files a list with the regulator saying, we are filing on behalf of these 20 companies. Some of the companies may invoke that. Otherwise, at least the regulators I've talked to say that information is confidential, proprietary. You can't find out who ISO is filing on behalf of, which I find mystifying. But anyway, my experience, having gone through all the training, is we can't find some of this stuff, and nobody can tell me why not. But
Well, Professor Seligman or Pantene could give you my contact information. I would volunteer to help anytime.
Awesome.
Yeah.
Who else? I've got a million questions, so I could spend.
Question, Jay.
Okay.
Can you hear me?
Yes.
So this is my
Okay, I was
business
just-
colleague
Robert.
who's an expert on marketing, Robert.
Yes. I was just wondering if you, when you had a good rating of the quality of the policies, you also knew their prices. To what extent did you find a price quality correlation?
Too complicated to do, because that you would have to do in a large number of states. Some states do that for consumers. In other states, we would have to do what a checkbook or CFA does both do from time to time, which is they come up with hypothetical policyholders, and they have people go to all the websites and get quotes beyond my resources. But right, what would the ideal be? You would have a single source for coverage, price, and quality, in which we don't have to worry too much about financial quality because the regulators take care of that, but quality of claims process.
Okay, Peter is next.
Oh, Peter. I see. Yes.
Jay, this was great. I admired this project. But then thanks for providing us specifically with the data on homeowner, consumer participation. One question is, understandably, you talk quite a bit about the first party property coverages and the comparisons. How important in your mind and with the ratings was liability insurance and the strengths of the various policies? That's an area I work on a bit more, and there can be some significant variations, particularly with the use of criminal acts and wrongful acts exclusions.
Yes, so you tell me this, but what our search of the data revealed is there are variations on things like that, like the innocent co-insured, criminal acts, couple of other things. But if you run those against the loss data in terms of severity and frequency of loss, they're much less important than most of the policy, the property policy terms. And therefore, we took it into a little account, but in the scheme of things overall, not as much. Do you disagree with that?
Oh, no,
sorry.
I think that's
You-
really
I'm not
interesting.
called Colin. Yeah.
I don't know if you meant me.
Yeah, I did meet you. Yeah.
Oh, I don't disagree with the impact. I'd love to, offline, we can maybe talk. I'd love to, see that. It's not surprising, but I'd love to see the data, because that's one thing I haven't thought about or done, is run through, the loss. What about liability insurance generally, as opposed to, specific exclusions? Or is that the same case, that it represents a smaller percentage?
The numbers are out there, and I don't remember what the numbers are, but it's a much smaller portion of the total amount of dollars paid out. And again, I mean, like, so when I teach insurance law, we teach the innocent co-insured, the domestic violence sort of case. Extremely important to those people. In terms of the underwriting, it just doesn't matter all that much.
Does the loss data, is that provided by, are you getting that from the NEIC or?
III has some of that. They submit some of that in their rate submissions and maybe other sources.
Okay. I mean, this is just, I think really, the more publicity of this program, your program gets, the better. Thanks.
Well, let me ask one quick one, which is, you said before that you were, in your ideal world, you'd have claims data, and that would give you some insight into, sort of the quality of the service provided. So I guess I have a two-part question. One is, how much of what really matters is the four corners of the document that you've read so carefully and tried to code up? And how much of it is the other stuff that's, the extra contractual, like, do they answer the phone? How many rings does it take? Do they, are they nice to you when you call them and helpful and all that? So, like, you could easily imagine that a lot of these things cover obscure contingencies that people don't really care about, but what they might really care about is, can they get someone to explain whether they're covered or not and stuff. So that's point A. Point B is, even if you had data on that, and I can see that it's hard to get, there's a weird sense in which that's not really, it's not necessarily responsive. It doesn't necessarily measure the insurer's behavior, because there's a combination of who the customers are who are producing these claims and who the insurer is. And that might look very different depending on whether you're Chubb or Allstate. So you're not really purely evaluating Chubb when you're evaluating how they handle their claims. You're also evaluating Chubb's customers, given all the other stuff. So I don't, you can answer either of those or neither of them, but anyway,
Happy to answer both of them, but remind me if I don't get to both of them. So the first, because we do not have statistical data on claims performance, it's very hard to say. If we had that data, we could actually do that research. I will give you my impression, and it's solely an impression based on talking to a lot of insurance agents, insureds, coverage lawyers, and so forth, which is the claims tend to follow the coverage. Chubb, by reputation, and we'll see what happens since they were recently acquired, gives excellent service. In part because, they're dealing with people who are going to complain. They're paying a lot of money for that service. By reputation, I'm not making this value judgment by myself. Allstate, not such good coverage, not such good claims. I was once at an industry conference where I met, I can't remember the name of the insurer, but the VP of claims for a small insurer who sold to farmers in North Dakota and Minnesota. He said, we give them the kind of coverage they need. We give them excellent claim service, because if we don't, they're going to go to the Grange and the church and they're going to talk, and I'm going to be out of business. So I think those two are in sync, but I would sure like to have the data to know that. The second part of your question, I have forgotten.
Well, even the first part is just like, so how much, what's your sense of how much of the iceberg is that as opposed to the part that you can actually see and code up with the policy terms? I mean, how important, if you had that, what weight would you attach to that information?
So if you'd asked me this question in 2010, when I published on this topic for the first time, I would have said I would put a great deal of weight, I don't know what the number is, but a significant proportion on the claims data. Now, I think that number has decreased relative to the coverage data, simply because we see so much of the coverage being carved away. And therefore, even if you have a good insurer, you know, a lot of the pretty good mass market insurers are just selling insurance, which is not as good. And even if consumers were informed, maybe they wouldn't pay for better. I don't know, but I think that's the situation.
Okay, I don't want to monopolize things, but my second question was, how do you deal with the fact that you really not, the claims data don't exogenously measure the insurer's performance. They measure the combination of the clients that they have and the performance that they give, which is obviously partly their fault, but not all.
Right, exactly. So if you get the percentage of policyholders that have to sue Chubb versus Allstate, there are people who know more about this than I do, but I could go to those people and say, okay, let's see if we can get data on the profile of policyholders. And we don't want to compare apples to oranges, but just to guess, you can compare Allstate to State Farm or something like that, or there's ways of tweaking those data to account for that. But that is surely the case. On the other hand, I suspect, but you know, people who buy Chubb never think about buying Allstate or State Farm, wouldn't even enter their consciousness, and vice versa. And therefore, we have a segment of everybody who advertises on TV and everybody else, or something. But I think we could give the economists, the statisticians, the actuaries, whoever it is that does enough data to account for that.
Okay, well, we'll leave it to them then. Travis, did you have a question?
Sure. I mean, so it seems to me that like if what you're trying, if the goal is to really help people purchase the insurance they need, you know, given their budgets and particular risk profiles, that there's a sort of antecedent step that one could imagine, sort of like a TurboTax. And I imagine a good producer would do this, but you know, say like, hey, tell me about yourself. Do you live in a flood zone? Do you keep a really expensive car in a detached garage? You know, like, do you happen to have bears in your neighborhood that trample your fence on a regular basis, which is a problem that I happen to suffer from? And, you know, like, tell us a little bit about yourself such that we can help you identify which of these coverages really matter to you. And also, like, you know, and I think it was Carolyn Kowski who spoke about this in one of our talks, that, you know, you should know that where you are, you know, you will have a really hard time getting flood coverage because you live in, like, you know, the wrong part of Florida or whatever. And just there's the sort of educational component of this that happens before the purchaser goes and starts trying to decipher the terms of the policies. I realize that's a much bigger, in a way it's a bigger project, but in a way it's also a smaller project because it doesn't need to be, it's not based on a ton of data. It would be like something like a TurboTax, I imagine.
Right. I don't disagree with that, but the Rutgers Center for Risk and Responsibility is 3 guys from New Jersey. And the advantage of TurboTax is they have a product to sell, which people want. I couldn't complete my income taxes by myself, or I don't want to bother TurboTax, and they'll do it in a sophisticated way. So it's that, but this is again my impression, and I wish I had data, which I don't. My impression for a lot of people, the process ought to work in reverse. For most homeowners, it's pretty much the same. And to pick up on an earlier comment, if we were to do this on a regional basis, yeah, for most New Jersey homeowners, it's pretty much the same. There's a big difference between people who live at the shore, but by and large, people who live at the shore know that because they're much more prone to flooding than people who live where I do, inland. So what this is designed to do is to appeal to the large middle who say, okay, let's think a little bit about the quality you're getting. Now, when you go to shop, by the way, also, as I said, if you have a shed, if you do business out of your garage, yeah, flood would be great. Some other things, you ought to think about that. My impression, based on no evidence except anecdotal, is for most people, it goes in the other direction. They ought to think about the basic issue first and then focus on their situation. Would love that. And if you go to some of the commercial websites, they do that to the limited extent they can make money out of it.
Anybody else want to come in? Yeah, there's Peter. Go ahead, Peter Kostenberger.
Oh, just so Jay, you mentioned it briefly, but have you approached any insurance companies about, helping out or, whether providing forms or, evaluating what, looking at how you explain various policy terms?
Yes, I have asked them to provide forms and they say no, or don't say anything. I have even approached some of them individually. Last time I was shopping for insurance, I went to some of the top companies, the best companies that we would all agree on. And I said, will you give me the policy? One said, no, we don't do that. Another one said, no, but in conversation, they said, look, you're a sophisticated person. We use the base HO5, so go get that. They've not provided that. I haven't bothered, frankly, to ask, gee, will you give me your underwriting data? If they would give it to anybody in anonymous form, I'm the last person on the planet. So I would love to find a partner who would do that, or a regulator who would say, at least, as a few of them have done, yeah, let's get copies of all the policies. I'll settle for that. I'm easy.
But regulators might be easier, at least a couple to approach.
Yes,
and
we continue to work on that. Yeah, there are I don't know if it's surprising. There are a handful of regulators who are quite consumer friendly. Many others who are neutral or indifferent. Peter Siegelman earlier talked about capture, and my take on it, to be charitable, is this isn't traditional capture. It's the only people they talk to all day, every day are insurance people, insurance industry people, and rarely consumer advocates. And therefore, they just never hear this side of the story, but I'm happy to try to fill that out.
And it is sort of baffling why, because I've heard this too, that insurers are so reluctant to give out their policy forms. I mean, it's not a trade secret, but they treated it. And sometimes they've claimed that it is one, even though tens of thousands, if not hundreds of thousands of samples are out, forms are out there. But I'm not surprised, but it is disappointing.
I'm not surprised. It makes perfect sense, right? 15 minutes will save you 15% or more in car insurance, which is responsible for 90+% of the insurance purchases in America, personal lines. So they don't want to compete on quality except for at the level of, we'll protect you against mayhem. Allstate. Yeah, maybe.
Just one more comment. I wonder if bundling or the option to combine and get a discount would be a valuable field on there. And then just for whatever it's worth, not a week has gone by. I haven't been yelled at by a member of the public about their insurance, and not a week has gone by that I haven't helped somebody get something they needed. I think that you'll find regulators deal a lot more with consumers than they deal with the insurance companies, except to ask them, why did you do that?
Yeah, right. Totally. That is, and I think this is what you're referring to. When individual consumers go through the complaint process, at least in a lot of the states I'm familiar with, it's very effective. Yesterday, that's exactly what I recommended to one of the people who works for the cleaning service, who works for our house. She had a particular problem involving car insurance. I said, okay, next time you talk to the adjuster, ask to speak to the supervisor. If you're still not satisfied, here's the number of the Department of Banking and Insurance. I think that's great. Many states, including this one, works well. I think that doesn't always translate as well as at least I would like to the rulemaking and regulatory side.
Fair
Some
enough.
places, yes, some places.
Fair enough.
Yeah.
We have a few more minutes. Anybody? I got a zillion questions. So Jay, let's see if this is fair, and if it's not, you can just dismiss it. But like, it seems to me there's a regulatory failure here to imagine what. Let me start off again. How much homogeneity should there be? Why not just say there is, we have gold, silver, bronze, or whatever. Like, we're just going to design 4 plans and that's it. And there will be no comparison because there will be only these 4 plans. There'll be 4 comparisons and that's it. Would that, whether or not it's feasible to do that, would that be a better world than having these little small differences that you're going to have to do a ton of work to code up and that I'm going to have to do a ton of work to try to figure out even after you've coded them up?
I don't know if that would be a better world, but I will say Rick, Adam, and I, my Rutgers colleagues and I were talking yesterday, and never waste a good crisis, right? There is a widespread perception, which is accurate, that there is now or there's shortly going to be a crisis of homeowners insurance availability and affordability. Okay, so what do you do about that? Well, one thing is you set up residual market mechanisms. Another thing you do is maybe you rethink homeowners insurance in a wide variety of ways. For example, let's just have gold, silver, bronze. Or Robert Schindler, who spoke earlier at a conference we did a couple of years ago, said, look, there ought to be 2 policies. One is basically a catastrophic loss policy, and one is sort of a home warranty. And everybody has to have the first. The second one, we don't care, or buy whatever you want. Absolutely. And I think this is a moment to rethink that. And one hopes there are possibilities there. And we would like to explore that.
Awesome. All right, Rick, you got the last word.
Oh, I don't want the last word. I just
The
wanted
last
to
question.
sort of add on. No, I was just going to add on to sort of part of the conversation Jay and I were having and say there's a natural experiment to this going on right now, right? I mean, California is stripping liability coverage from property. Jay and Adam and I were asking, like, do people care? Should they care? Do they know what they're giving up? Do they care? We just don't know. And I don't quite know if if lenders care, right? I mean, there's another stakeholder in the room. I mean, and whether they should. I mean, I guess this is, Jay teaches torts, so he probably knows. But I mean, it's sort of a bankruptcy question, right? I mean, if you have a tort liability, how much and it's state by state whether they can get to your house or not.
Cool. All right, Travis, get the last word then.
So I want to do a thing that's kind of in vogue right now, which is to just gesticulate wildly at AI, and ask, how that will influence this. Because there's an easy world that you can imagine where you would have a chat bot that would ask you all the kind of questions I mentioned earlier, and then just advise you on the basis of all the policies that it had comprehensively compared and scraped the deepest interstices of the internet for, and give you the answer that you want. Is that something that you foresee being possible, assuming that the tech is there?
There's, I mean, this world better than I do, but there's so many insurtech people out there. Everybody wants to be a founder. Sure hope so. I don't see quite yet how the money's in it, but that's okay because I'm a guy who throws a check every 2 weeks. On the commercial side, interestingly, there is a company called, all these companies has names like Risk Genius, which I think has been bought by either Bold Penguin or Value Penguin or something like that. But they do not quite that, but they work for brokers because brokers have access to all the policies. They use AI to read all the policies, not to say what's best for this customer, but to say, oh, in all of these policies, here's the 2 terms that are relevant to what you're looking at. And then the broker has to make the judgment about, okay, in terms of the risk. Yeah, my guess is you could get an AI to do that. As in many things in our society, you got to figure out a way to make money out of it.
Great note to end on.
Yeah. That is I guess, mixed optimistic and pessimistic way to conclude. Please join me in thanking Jay for a fascinating talk, and come back in 2 weeks for another one, hopefully. Thank you.
Be well again.
Bye. I got to
Thank you
run,
so
sorry.
much. Bye.
Okay.
Thank you.